So the Federal Reserve just raised their benchmark interest rates by 25 basis points, making it the highest interest rate hike since 2007. However, this is just the beginning. Home sales have declined year over year, and JP Morgan warns that we are past the point of no return. Now, the Federal Reserve, they're not done yet. So it's essential to discuss what's going to happen throughout the rest of 2023 and the new changes that are taking place. So in this video, I'm going to discuss this recent inflation report, the implications of the rate hike that happened yesterday, and how it will affect investments. Now, my name's Rock Daniels. I'm the Bluegrass Realtor, drinking coffee out of a mason jar for all your Central Kentucky real estate needs. Now, all you need to do is take a moment, hit that subscribe button so you and I can stay connected. Now, the latest inflation report reveals that inflation is up 6% from a year ago, with prices rising by 0.4% from the previous month. Now, housing, it's the biggest contributor to inflation, with overall shelter costs increasing by 0.8% month over month, or by 8.1% year over year. Now, housing accounts for over a third of the overall inflation readings. So rents are often seen as a lagging indicator, but the good news is that national rents are beginning to drop a little bit, suggesting that it may be reflected in upcoming inflation reports. Besides food, which have increased by 9.5% over the last year, or 0.4% month over month, almost all other items have declined. Energy, gasoline, used cars, medical care services have all decreased, indicating that inflation is beginning to come down. Now, the Federal Reserve's rate hike has implications throughout the entire market. Rising interest rates have been a recurring source of financial pain throughout the United States. Now, a sharp rise in interest rates caused the savings and loan crisis throughout the early 1980s, the bursting of the dot-com bubble throughout the 2000s, and the decline of home prices during 2008. We all remember that, that huge financial crisis. So JP Morgan warns that we are past the point of no return, and that we could see federal funds rates as high as 6% by the end of this year. So the Federal Reserve indicated that we could have a peak federal funds rate of 5.1% at the end of 2023, suggesting that will be more likely that two or more rate hikes will come before the end of the year on May the 3rd, or one on June the 14th. Now, the rate hike will affect investments differently. Now, bonds will decrease in value, while stocks will likely be under pressure. So the real estate market will be also affected, with higher interest rates making mortgages way more expensive. Now, the housing market may slow down as a result. Now, the impact on gold is uncertain, but it's typically going to have an inverse relationship with these interest rates. So finally, the rate hike may increase the value of the US dollar. So you might want to look into that. So in conclusion, the rate hike will have significant implications throughout the entire market, affecting investments in various ways. Now, it's essential to stay informed and adjust your investment strategy accordingly to mitigate any kind of risk or maximize your returns. All right? So remember, my name's Rock Daniels. I am the Bluegrass Realtor right here in Central Kentucky for all your real estate needs. Just give me a call, take a moment, hit that subscribe button so that you and I can stay connected. Thank you so much for stopping by today. I really appreciate it. I look forward to seeing you again soon on one of my